I think phase one was definitely kind of a trade skirmish. It's definitely seemed to be moving towards phase two, more of an economic war. And I'm not saying that's going to be any more dire. As a matter of fact, I think diversification of production lines and supply chains is underway, and no matter how it turns out, I think that's going to progress. Your thoughts?
Actually, Rick, I think it's a mixed blessing. We know for sure that if you start moving facilities from China to, say, Vietnam or some other location, that has some cost. So instead of spending money to grow, we're spending money to reproduce the same thing in a new location, and that's the downside to this. One of the upsides, I think, are the reports that the U.S. is talking with Japan and Europe about a coordinated effort to rewrite the rules on state subsidies at the WTO, get that off the table for China. I think that's a fantastic step forward. We have needed for a long time to have a united front on this trade/economic skirmish, and we're starting to see that.
You know, Doug, it's funny that you basically say and isolate China. Now, many have said it was a big mistake for the U.S. not to join TPP for the same reasons. But I would say that bilateral agreements do have a certain flair that Donald Trump likes, and they may be better for a country like the U.S. Your thought?
I think bilateral agreements are something the president likes. He's made that very clear. It does give him the ability to use the access to the U.S. market as a big piece of leverage, and I understand that argument. And I think probably it works with almost everybody but China. I just have never thought that it would be possible for China to visibly lose in any deep sense and come to an agreement. So I always thought it'd be hard to get them to the table, hard to get a deal. It's proven to be that way. And so with China, I think you need more partners, and they're starting to do that.
You know, as a technician, Doug, I look at the equity markets and I think, okay, we have the indices, all but the Dow, make new all-time highs. But they didn't really go through with a lot of intensity. If we continue to linger in the current condition without solving this, and it does morph into something more long-lasting, can the U.S. economy continue to chug along, maybe not extend, but still stay in the same parameters with regard to the range of investment capital and the return?
I think the wild card here has been the household sector. I really expected the household sector to continue quite strongly through 2019. Tremendous job creation, wages are growing, extremely low unemployment rates. That's all a recipe for a strong household sector. And we've seen some surprisingly weak reports in the early part of 2019. If those clean up and the household sector stays strong, there's no reason why we can't continue to grow in the mid 2% year after year.